And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, you futures trading family. It's time for the market forecast, Wednesday, September the 21st. My name's John Hogan. Thanks for trusting me with your time. Yes, finally, it's Fed Day. The day we've all been waiting for, the day we all hurry up and wait, the day we all truly try and focus on good risk management. 9 o'clock this morning in Central Time, we're expecting the existing home sales, 9:30 petroleum status report, 1 p.m. Central, the FOMC announcement, and 1:30 the Powell press conference. Welcome, everyone. If you're already in the markets, hopefully you've got things going your way. See some traders with some pretty good numbers already up this morning, so it's always good to see. Yes, Fed Day is here. Again, we're going to hurry up and wait. It's Capital Preservation Day. The consensus is for a 75 basis point hike in interest rates. We're going to get a fresh look today at the dot plot, which indicates the Fed's ideas or expectations on how high rates are going to have to go and how long they're going to have to stay at those levels. We saw crude prices jump 1 o'clock in the morning here this morning after Putin announced he's bringing up some of his military reserves and also a smaller than expected rise in inventory per the API yesterday, only 1.1 million barrel boost. The EIA is seeing a 2.1 million barrel boost here in the U.S., so we've got lots of information, lots of expectations, and lots of, I'm sure, good trade ideas, or at least some good hypotheses. Context is ultimately important, as well as always thinking about risk management and remaining patient. Relax. There's going to be opportunity today, whether you choose to jump in when the market knee jerks after the FOMC, or if you would decide to wait a little while afterwards. We're hoping for your success and, hoping that you remain good risk managers. It's going to be thin. The markets are going to be sort of quiet before the FOMC release, maybe not in crude oil. We do have that existing home sales at 9 o'clock, which may affect our equities markets and other markets. So just be aware, the markets are going to be a little quieter, in my opinion, and a little bit thinner. We're going to have some pretty illiquid periods of time today, especially when that FOMC announcement comes out. You can see it right in your dome. You're going to see the S&Ps down to single digits on bids and offers. That's illiquid. That's going to seriously change my opinion on whether I'm going to jump in. You guys have probably all heard me say over and over again that I don't hold positions into major economic releases, and this is the biggie right now. So I'm going to watch. We're going to be in Top Steps strategy class when it happens. We'll take a break and we'll see what happens and watch some of the fireworks during that. And I'm kind of thankful that I'm going to be too busy to trade at that time today. So I'm going to be looking for shorter time frame opportunities today, looking for opportunities that are going to largely be based on short time frame levels, because our bigger players have probably set themselves up, hedged themselves, positioned themselves to protect themselves from major losses when this release comes out. So it is going to be one of those days. Alfred, the numbers on the dome, those are actual, not in the thousands. Those are actual numbers of bids and offers. What time on the West Coast? Well, the West Coast is 2 hours behind us, so it's going to be 11 p.m. Central, if I'm not incorrect on that. 11 p.m. Central when the FOMC release comes out. So, taking a brief look at the VIX, the dollar index, and the 10-year yield. VIX pretty much just steady. It's 2706. Dollar index just put in a new, fresh 52-week high, currently approximately 110.79, and the yield on the 10-year holding steady at 3.5%. We know that's probably going to be changing today. As always, if you like what you see, hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. If there's something we're missing, tell me. Jay Hoagland at topstep.com. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. As always, it's a pleasure to see everybody. Theo, first in the room this morning, you win the prize, Theo. Jules, dead letter opener. What's up, Doc? Brian, Shaw Cunningham, good morning and happy Let's Watch the Volatility at 1 p.m. day. That's my plan, too. I'm going to do everything in my power not to lose money today. The Rooster, morning everyone, the day we've been waiting for. Yep, Tachyon, good morning, dead letter opener. Patrick, JD, good to see you, sir. Alfred, dead letter opener. We've got Zareen, George Duque, good morning. Scarlet Arachnid, good morning. George, Lacey is now on the floor. She was just caught her up on the forbidden couch. So she's now hanging out on the floor looking at me like, are you talking about me? Are you talking about me? Scott saw and he conquered. Eric Hill, Caesar. James, my brother Rick, I love you. Talk to you shortly, I'm sure. JTS Wave, Serenity Trader, Grim Reaper Trader. Hoagie is in the black. And the third time, third time's a charm. Interest rates, crash. Nah, I don't know if there's any real good market signals according to the colors of the shirts that I wear, because 9 out of 10 of my shirts are black. I find them slimming. Good morning, Dan Trader. Edward, good morning. Yesterday was the first day of funded trading for you. $150. Nice job. Start off on the right foot, Edward. Great to hear that you're off and running on the plus side. Be careful today. Sarah, prayers and love to you as well. Glitter Sandwich, Unicus, with his quote for the day. I love this, Unicus. 2 things define you: your patience when you have nothing and your attitude when you have everything. Great quote. It kind of reminds me of one of my dad's quotes. Wealth isn't about how much you have, it's about how little you need. Columbus, good morning. Rusty Golfer, my spirit animals here. Dick Dark Heaven, missed a couple of days, but back. Good morning to you. Good to have you back. Terry King, Marcelo, 3 Lions Insight, Alfred. Numbers on the dome are the actual numbers. Vince, good morning. Michael, good morning. Orion, good morning to you. Sell, Mortimer, sell. Where the hell is Wilson? Dan Trader, 4 p.m. You would probably be somewhere in the Atlantic if you were going to be seeing the FOMC at 1 p.m. Central at 4 p.m. So, good morning. Happy Capital Preservation Day, says David. Absolutely. Jerry is awake. Good to see you. Sonny, good to see you. Marcelo. Yeah, we're going to be posting all those Top Step strategy sessions. They'll be online. They'll probably be on YouTube. The first time we presented them, those are on YouTube. Now we're doing them again, so you'll have plenty of opportunity to see them. Hopefully very soon. Good morning, Jay. Good morning to everyone. Hello, Rob T. All right. You hear Lacey? She's drinking water. She's very messy. Good morning, Mike. All right. So we're going to start by looking at these charts. Markets really testing some important levels yesterday and probably into today. We've got the euro breaking down below weekly kickoff low, something we haven't seen in a couple of weeks, and maybe some opportunity to the downside for the euro today. We're going to have to take a look. Let me get set up here. We've got the daily in the S&Ps. Let's dive in, shall we? All right. Look at how this, today is Wednesday, right? Wednesday, 1, 2, 3 tests of weekly kickoff low, pretty much almost right on it yesterday. Where is that? 38.51, 38, well, pretty much almost right on it today. Good looks at it, finding rejection down at that level. And this is where that level came from, the 19th of July. You guys are probably tired of hearing me talk about it, but there was a change in the marketplace that I sensed in that day, and we are back at that level. It makes sense to me that any buyers that had come in and taken this market higher may be protecting those levels if they can, and we've been holding that as our lows for the entire week, pretty much, relatively close. Everything like level wise is always part of a zone. They're never finite levels. So we've had it a couple of looks below, and we've rejected every time. We lost 2,500 in open interest yesterday. It makes sense to me. A lot of folks are probably limiting their positions for FOMC today. Low volume yesterday, not great, and open interest with a small loss. Again, people just preparing themselves for what might happen today. Take a look at the 30-minute. We've got the market kind of looking to the upside. Here's our weekly kickoff low. Last week's low, weekly kickoff low, a 20% pull back off the all-time high. We looked below it yesterday. We dug out. We see the market continuing to try and push to the upside. If we're going to see any overnight inventory, it's probably to the long side. Expecting limited longer time frame participation because they're hedged and positioned for the FOMC leads me to believe if there are good opportunities today, they're going to be based either on the weekly kickoff low here or based off of short time frame levels, previous value highs, previous value lows, range highs, overnight highs and lows. Those are the levels I'm going to focus on today for early trade. I'm going to be flat long before the FOMC release comes out, and probably flat for the rest of the day because it's a change in strategy to try and figure out how to find ways into a volatile move in a volatile market. I'm not going to be setting up any hypotheses for anything that I think might happen after the FOMC because, as we always say, what was I going to say? I lost my train of thought there for a second. Never mind. So what are we doing? We're looking for short time frame levels. I'm not going to be setting up hypotheses for anything that's going to happen. And I've, taken enough positions into major economic releases, and I'm about even on them. So I'm just not going to play. Anything can happen. Absolutely. ACH. So again, looking for opportunities based on short time frame levels prior to the FOMC meeting. Anything after noon today, I'm probably going to just avoid. And that's just me. The people do like to trade into these. Maybe they're exciting. Maybe they can find ways in their own strategy to be able to limit risk and to protect themselves from big losses. And you can find really big gains too. But the losses to me are just not worth it. I've had really big, great days, and I've had horrible days coming into economic releases, and I just don't want to play it anymore because I've come out about even. So why even bother? Crude oil, we got day 4 in range. We got some technical support for the week here in the weekly kickoff low. We looked at it yesterday. We've stopped short of it today. We've got a little bit of a push to the upside here in the overnight created by kind of Russian uncertainty. Rollover is just about done. We're just about ready to expire the October contract. So we did add 2,800 in open interest yesterday. Nothing tremendous. We lost 14,700 in the October contract. So there was a pretty decent boost in open interest in the future in coming months. But again, not sure really how to read that because of rollover. EIA consensus is looking for a 2.1 million barrel boost, if anybody's going to be focusing on that today. Take a look at the 30. 1, 2, 3, 4, 5th day in range. Overnight inventory is a little bit maybe to the long side, but we've done a lot, I think, since 1 o'clock this morning when Putin chirped up. I think we've done a lot to even out inventory. This trend line up here, if I were to look at this, I would say this could be an inverse head and shoulders, but we haven't really come down to it. That's more of a reversal pattern, and this is really just kind of range bound. So I'm kind of looking at a brief focus this morning at this trend line as creating some short time frame opportunity, because it really kind of caps off the range that we've been in for the last 3 days. A little bit higher than that if you add the 4th day back here, and then weekly kickoff low. Again, looking for short time frame levels because we are looking at probably some longer time frame traders really just getting back into the market as far as directional activity. Crude oil is so vastly hedged and spread with the major players, so I'm going to be really kind of patient. I mean, we're opening above value. We're opening in range. Don't really see that there's any real need to get involved early in the session today. I'm not thinking that the opening range trade is going to be fruitful. Here it is, if it shows it. Okay, so, opening range is the low of the session so far, but I'm not really expecting that to really remain. Let's take a look at the Nasdaq now. Very similar situation to the S&Ps. No true test of weekly kickoff lows so far this week. Just really kind of holding last week's low as Monday's low. Volume, okay. Open interest. We added 3,500 in open interest in the Nasdaq yesterday, so a little bit bigger moves as far as volume and open interest are concerned in the Nasdaq. Nasdaq is, has been currently holding stronger above weekly kickoff low, but remember, this is the day that we're kind of keeping in focus as in the S&Ps as a change in the kind of personality of the market. It's still wrestling in that area, a very wide zone of it, and holding support here, weekly kickoff low. Take a look at the 30-minute. Really no overnight inventory. The market seems to be catching a bid here before the open. And, this can be somewhat indicative of how the market might look as it opens up in regular trading hours. You can kind of look at this as kind of an opening call. You're seeing buyers getting into the market prior to the open. We're not seeing great volume here. We did see some pretty decent volume at 1 o'clock and thereafter when Putin started yakking. But overall, I think we were really flat as far as inventory is concerned and in short time frame control. Again, because of our longer time frame traders just making sure that they're hedged and positioned for today. If they're done, we're not going to see a lot of longer time frame participation. We're likely to see low volume, low liquidity, and look for opportunities against short time frame levels. We've got an inside extended trading hour range inside yesterday's regular trading hour range. The market is really just kind of honing in to where it's likely to just hang out until 1 p.m. today. Don't forget, we do have existing home sales at 9 o'clock. That might be something. So try and stay patient. I'm certainly not going to be getting involved too early today. I'm going to let the equities markets establish an early range, and my focus will be on that early range for opportunities. We've got overnight high and low. We've got yesterday's high and low. All important short time frame levels to look for opportunities. Gold lost 1,600 in open interest yesterday. Look at how terrible the volume has been. This market has just been left on the side of the road, on the back burner, whatever you want to say. We've got range-bound activity just still remains. FOMC anticipation. This market is saying relax. Frankie says relax. Don't do it. Short time frame control. Range-bound short time frame control. Here's the 30-minute. Range, smaller range, smaller range, smaller range. Do we have any overnight inventory with which to work with? Maybe. We may be a little bit long. Do we have points of contact here? We have 1, 2. Now it seems as though this trend line is holding support. It might give us opportunity. It's pretty short time frame. But again, I'm going to be focusing on short time frame levels for opportunities if I see anything. Right now, I don't really have a true hypothesis that I've put together to try and figure out what this market is doing or is going to do. And to the euro, finally, again, we're seeing a pretty decent move to the downside. This was in the September month, so we don't see the volume, but we're seeing already good volume today in this move to the downside. What did we do yesterday? We only added a couple hundred in open interest. Now remember, this is coming to the end of roll, so there's a little bit of blur to that. So today we may see some fireworks here. Take a look at the 30-minute chart and we see if there's any. Oh, yeah, we've got the dollar again at a new 52-week high also. The euro is going to be heavy today. Look at how it adhered to the weekly kickoff low so well for so many days. Now we've got a breakout down below. We have one naked point of control with which to check today. We've got overnight inventory holding to the short side. Not a lot of daytime frame reference down here, ladies and gentlemen. We haven't been down here in quite some time. So again, with the market out of balance and through an important inflection level, if the market gives me opportunities to look for shorts on strength, I would probably be interested in that. Where are those levels? Last week's low. Weekly kickoff low, almost like a gap close. But again, we are holding to gap rules here. We can't close the gap relatively early. We're looking for opportunities to continue this market to move lower. Keep an eye on the dollar. 10-year. Finally, a decent move on decent volume through an important inflection level. We've got a loss in open interest, which is the only thing that leads me to believe that this move to the downside may actually be tiring We know rates are going up today. It's already in the market. The overnight tested straight to weekly kickoff high. Take a look. We holding some overnight longs in this? Quite possibly. There's our test to weekly kickoff high. It's not a very strong high. It's a double top. Weak high. Could rates rise and prices rise in the 10-year? Could that happen? Stay tuned to as the market turns. I'm probably not going to be involved in this today. But if I was, the weekly kickoff high looks like a really good level to look for an opportunity. Weekly kickoff low, I should say. That's the low. To be precise, it's 114.07.5 is weekly kickoff low. 114.07.5. Straight to it. Watch the overnight low as well. And take a look at the nat gas. We had potential head and shoulders, but we didn't. Did we really break the neckline? It looked like we did. Looks like we've got a little bit of a change going on here. We lost 5,900 in open interest yesterday, and I find that, again, largely rollover related. We're probably going to be moving to the November contract tomorrow, so we're in the teeth of rollover, which makes sense that we've become very kind of rotational or balanced, if you will, to a degree. I think that is true because our longer time frame traders are working on getting a cheap rollover. Here's the 30. Here's our look and rejection below weekly kickoff low. There are visuals all over the place for this market to go back and check. By visuals, I'm saying right now, naked points of control. We've got dozens of them down below. We've got a few up above as well. Market is holding some overnight longs here. Those longs are currently reconciling. The market started right about here last night. Right about here. So all of this is overnight longs. All of it is currently reconciling. I'm going to try and be very content watching a lot today. I like what Dead Letter's saying. Remember, slow is smooth. Smooth is fast. Hope you have a great day too. Let Dead Letter opener. Yes, boring trades are good. I'm going to try and be bored a lot today. I don't have to make money today. All I have to do is not lose money today so that I can play tomorrow. So I'm going to keep myself pretty busy doing things, today. And, if I see something, it's going to have to come to me. I am not going looking for trades today. If something presents itself in a cheap manner that makes sense and that I'm prepared for, I may take it. But again, I'm not going to be trading during the FOMC release at all. We're going to be hanging out together with Top Step Strategies. So I'll look forward to seeing you there. Okay? Let the market play out. Tomorrow's another day. Today is going to be very challenging. Could be wildly profitable. It could be disastrous. I'm going to choose not to do it. Good day for a position on a baseball game. Yeah, how about that Yankee? 60 home runs. That's big stuff. So maybe watch a ball game today. Yeah, there you go. All right, let's take our deep breath. Stay calm, cool, collected, humble, grateful, and creative today. Make sure you're centered and protect yourself, protect profits, protect capital. Capital preservation is paramount today. Have a great day, everyone. I'll see you, if I don't see you for Top Step Strategies, I'll see you for the recap. We can have a couple of laughs and see what happened at 1 o'clock and at 1:30, and we'll see what we can prepare for tomorrow. Have a good day. Be patient. Frankie says, relax. Trade well today if you trade. Make sure you manage risk. Blessings, everyone. Have a good day.